Today, I'm going to talk with my friend Greg Canavan up in Sydney. You might know Greg from essays that he's written in the Daily Reckoning, but if you don't know him and aren't aware of where he's coming from as an investor, we're just going to chat for a few minutes today and talk about things that have been going on in the world and here in Australia. So, Greg, thanks for taking the time to be with me today.
Not a problem, Dan.
By the way, Greg's website, if you want to go check it out at any time, is soundmoneysoundinvestments.com.au. And we'll get to what that means in a minute. But Greg, I wanted to ask you something about your email alert that you sent to your subscribers on Friday, because as everyone knows, there's been a change in government here in Australia, and the big question a lot of investors have is, does this mean that the uncertainty is lifted for the mining stocks and you can start buying mining stocks safely? But you wrote this, you said, so now we have a new leader. What does this mean for the markets? Very little as far as I can tell. Events in the US, Europe, and China will have far more influence on our market than the tweaked policies brought about by a change in leadership. So you got right on the front foot and addressed it. Do you stand by that today, or did you change your mind overnight?
No, look, I think the issue here is that all we're going to see with a new leader, I think, is a tweak in the policy. Now, obviously, that's going to be a more positive or a less onerous tax for the mining industry than what the one imposed by the Rudd government was, but it's certainly not going to be, there's still going to be a tax. So it's going to be an issue, I think, for the miners, continue to be an issue. There's going to continue to be uncertainty. But the bigger picture issues are going to affect mining stocks is what's happening in the world economy and, of course, the effects of the slowing global economy on commodity prices. And if you look at the performance of the global mining stocks over the past month, you've got to sort of also factor in the big falls in commodity prices that we've seen around the same time as the proposed tax was first talked about. So I think there's as much of an influence as the global economy on resource stock prices at the moment as there is with this tax.
Right. Yeah, I figured you'd say that, but I mean that partly gets to your entire approach with investments anyway. You started your publication, Sound Money, Sound Investments, about 6 months ago, and prior to that, I suppose you were in the investment industry. So,
yeah.
Can you tell me a little bit about why what that means? First of all, where that name comes from, and then why you decided to start it up?
Yeah, sure. Well, first of all, Sound Money, Sound Investments. The reason why I came up with that name is. We'll start with sound money. I honestly think over the next, say, 10 years that we're going to move towards more of a sound monetary footing in the way the global monetary system actually works. And what that means is, at the moment, as most people would realise, we're operating on a very unsound monetary system. We've got the US dollar, which is the world's reserve currency, and that's been a product of, it's been around since the end of World War II. And what that has really done is created an insane amount of debt in the world. And I think we're really starting to see the problems of all this debt coming home to roost now. We're seeing it in Europe. We're obviously seeing it in the US, and we're probably not too far from seeing it in Australia. The household sector here's got a lot of debt as well. So what I'm getting at with the sound money is I think that over the next 5 to 10 years, the world is going to increasingly realise that the current monetary system doesn't work. It's not sustainable, and there will be a place for gold and perhaps precious metals in a new monetary system, and whether that includes various currencies operating as reserve currencies, I'm not too sure, but I think that's the way the world's gravitating towards, and I think having a decent amount of your portfolio invested with that in mind is a way to make money over the next 5 to 10 years. Now, to bring in the sound investment side of things, my view is that an unsound monetary system will create considerable volatility in the world, and the way to take advantage of that volatility is to have a very good analytical framework that allows you to value companies properly. And when those valuations are too high, you sell. And when those valuations become very compelling, that's when you buy. And I know that sounds like the age-old sell high and buy low. It's a lot easier said than done, and I think you need an actual operating framework to make that happen. So that's really what Sound Money, Sound Investments is all about, trying to look at the big picture view, realise what's going on in the world big picture wise, and then bring that back down to a money making level and say, how do I make money on the Aussie stock market by having these views? And I think that's the way I'm looking at doing it.
Yeah, I wanted to ask you about that because those they would seem to some people like polar opposite approaches. That a top-down macroeconomic, somewhat geopolitical approach, which has its understanding or its theoretical basis in a view about what money is. I'm completely sympathetic with that because that's what we try and do at the Daily Reckoning. And
Yep.
our conclusion is that, well, it's created quite a few asset bubbles, which makes it very challenging for an investor to value anything. If there's so much money flooding asset markets, it makes it very difficult to say this is what something's worth. So I suppose that's where the bottom-up part in the value investing comes. But do you have trouble sort of marrying the two, where you've got a very big picture approach, but then a bottom-up method of analysis? I guess the skeptical reader or investor might say, well, how could you possibly do both and come up with an investment strategy?
Yeah, look, and I can understand that point of view. And one of the issues with having a big picture view where you think that there's a lot of unsound underpinnings in the world economy means that for a lot of people they don't want to go near common stocks and they don't want to touch equity markets. But I think that's actually making a mistake. And the bottom line is if you can buy an undervalued company, and when I'm talking about undervalued company, I'm talking about a quality company that has a proven business model. And based on the expectation of a reasonable rate of return when you put into your model, if you can buy that company at a discount to its intrinsic value, unsound monetary system or not, it's still a very sound company within an economy that is going to continue to operate. The world's not going to collapse. I mean, that's one of the things that I try to get across here. Even though you might be negative on the bigger picture, global economies don't collapse. We continue to operate and function as a society, and that means good companies are always going to continue to make money. There will be volatility, and I think that the trick is to know when a stock is overvalued or when it's undervalued, and make your investment decisions based on those signals.
I'm glad to hear that the world's not going to collapse. Sometimes I'm not as sure myself, but
So I might point that out.
well, I suppose you wouldn't be doing what you're doing if you didn't think there was an opportunity there. But that's a question I wanted to ask you. That I've been in the newsletter business, which I'd like to consider a bit more independent than the institutional side of the business. I've been doing it for about 15 years. Now, you've been doing it, well, you started, and I guess I wanted to ask you why. There are many lucrative careers in finance. And
Yep.
for someone with your skills who has your understanding of markets and your ability to look at companies, why would you decide to write a newsletter during one of the most challenging stock markets people have ever seen?
Yeah, look, it's a good question, but I think firstly, it's the challenge. I love watching markets, and analysing markets is something I'm very passionate about. As you alluded to, when you're not independent, when you're stuck in the system, which is the financial system that most people operate in, your parameters are very limited into what you can say, what you can recommend, and it's difficult to I guess communicate your point of view on the world. And that's really a product of the financial industry really being, I guess, a victim of its own profitability, in that it's too scared to actually say what it really thinks. There's a mentality that you've got to be constantly bullish, that investors are not smart enough to be told that things aren't very good at the moment, and we need to think about doing things different ways. And I just thought that there was room for a product out there that appealed to investors who are smart and who want to genuinely manage their wealth, not be fed constant bullish propaganda that stocks always go up. And I think there's a real opportunity out there for people who want to get, and when I say the truth, I say it in inverted commas, because the truth is sometimes dependent on your viewpoint in the world. But I think people want to get an honest opinion of what's happening out there, and don't want to be fed the daily bullish diet of the stuff that comes out of the mainstream financial analysts. And I do think that there's room out there for people who want to hear that stuff and want to know how to preserve their wealth and then grow their wealth.
Yeah, I agree. Just in case you're joining us now, this is Greg Canavan. He's the editor of Sound Money, Sound Investments. It's soundmoneysoundinvestments.com.au.